other participant. I thought,
What?
okay. I thought we three. Sorry.
You thought what?
I thought it was three of us, but now I see it's only two.
Nah, it's just busy at the moment, but then it's fine. So
Not
how
bad,
is
not bad.
last time we had a very long session on back testing, bro? How?
Yo, that was a very long, long session.
Yeah, eh? How is it now? Did you try to back test more like yesterday? Ne? Because yesterday we didn't
I
have a
did
session.
the I did the test yesterday, but I only took one trade for the whole month.
You did only for 1 month.
Yeah, but it was only one trade.
Oh, you only took one trade. But then in terms of
Yeah.
the tools which I gave you, like calculating lot size, you don't have any problems. You know, like how to calculate, how
Yes.
to, uh,
Yeah.
like what
Yes, I
norms.
do. Yes, I do.
Yeah, okay,
I did not have any challenge.
then that's proper then. All right. So okay, I gave you a book on like trading psychology for trading in the zone. Eh?
Yes.
You've been reading it because this will play a
Yes.
huge
I'm
factor
reading.
as we develop like
I'm
your.
reading.
Eh?
I'm reading it. I'm on chapter 10 now. Chapter 10 or 11, yeah. I'm on chapter 10 now.
All
I'm
right.
about to start chapter 11 because I do one chapter a day. It's this one chapter a day.
Okay, let's just go back now to like chapter one. And then if you don't mind, you can just let's just discuss like so far what have you learned, like things which surprise you, things which you didn't know, or key things which you like got from the chapter one. Just an open. I don't know, like when you read, do you highlight or you take notes or you just read like once and then you move forward?
Oh, so when I read books, you know what I do? The first time I read it once, and then when I come back again, I then try to read everything to understand.
Okay. Yeah, yeah, okay.
Yeah, that's how.
But yeah. Yeah, because if you are in a book,
Yeah,
you never like at first, if you just read it like once, no way you'll get like the information
yeah,
hidden. There is this saying which I don't know who said it, I forget. Like they said, if you want to hide knowledge from people, hide it inside a book because they know
yeah,
are lazy to read because everything is there inside the book. Like if you read books, you get to understand, you get your answers, everything which you
yeah,
need in books.
yes, yes.
So
I
right, but then
understand.
just so far, like how is the book? Is it the first time reading it? Did you know about it?
Yeah, it's my first time reading a
Reading.
trading book other than the activity.
Mm.
Yeah.
So how can you rate it so far? What do you think of it? You think it's a myth or it's like real? You think the guy is lying when he's busy focusing on psychology? Because this book is more focused on psychology. Like for you to be successful, you have to focus more on your psychology. You can have one of the best strategies. I can give you one of the best strategies, ne? But then if your
Yeah.
psychology is not like intact, if your psychology is not proper, you won't be able to execute that strategy flawlessly. So Mark Douglas keeps on saying to you, like, for you to fully execute your strategy, you have to execute it with no errors. Like you must not hesitate, you must not make mistakes. That's when you can fully benefit from your strategy. People have like a good strategy, né? But then
Yeah.
if you have fear, like fear of losing, fear of missing out, fear of leaving money on the table, then you will no longer like benefit from the strategy which you have. How can you benefit if you are afraid to enter a trade because you think that you will lose? So you will see your setup is there, but then you just sit and do nothing because you are afraid. We have people who are like that, but then some they like to
Yeah.
trade. some they are afraid of trading. So you have to know which side you are at. You, I think you are at the side of you want to trade more rather than you not wanting to trade.
Yeah.
Yeah, so
For
that's
me,
why
for me,
that's why that's why psychology is very important, bro. Like it will eliminate those errors which you make as a human person, and then you end up trading flawlessly. You must trade at a state of mind where you are like state of free care, like flawlessly, no errors, no hesitations, no FOMO, none of those things.
yes.
Mm. And then, so last time I read this book, I came up with a very important note. Let me see if I can try to share it here. Like the five trading truths. Like this is something which you just have to like come into terms with it, or like you just have to agree. Let me try to share my screen here so that you can see. Mm, share screen. Okay. Yeah, can you see that?
Yes, I can.
Yeah, so those are like the five trading truths which I came up with. Ne? If you continue reading, you'll find like some of the things are then like trading in the zone. So one thing which is
Yeah.
says anything can happen like in the market. That's one thing which you have to have at the back of your mind when you're trading, that anything can happen in the market. Everything that happens is unique. Okay, let's discuss like anything can happen. What does it mean? It's like, so if you accept this truth, like in trading, that anything can happen at any moment, how can you trade without a stop loss, knowing that anything can happen, bro? The market can just be volatile. The market can just go against you. The market can just go with you. So you must know that anything can happen, meaning each trade is unique. You must trade it like like it's a new thing. Forget about your past trade. Your past trade are now gone. Now you are in a new market. This is a new trade. And know that anything can happen. It doesn't matter if the strategy is the same as previously. Still, anything can happen. And then another one, the second one is you don't need to know what is going to happen next to make money. By this statement, you know what it means? Like, you don't have to stress too much. Like, is the market going to go up? Is the market as to like, you can just anticipate. You can just anticipate like through your technical analysis, have your technical analysis, put your stop loss, put your SL, put your TP, and then let the market plays out. You don't have to do too much. That's why me, I don't trade news. Like I don't like go deep into news, trying to find out if USDT is a buy, what will this guy say? What will nah. I focus on my technical analysis. I don't have to know what will happen in the news for me to make money, bro. I just stick to my technical analysis. If it plays out, it plays out. If it doesn't, it doesn't. Because this thing is a game of probabilities. You win some, you lose some. But make sure that when win you win big, and when you lose small. That is the key. And then the third one, there is a random distribution between winners and losses for any given set of variables that defines an edge. So this is key. This is when we talk about like probability of trading. There's a random distribution between winners and losses. This they mean that no matter how good your strategy is, you will take losses and you will take winners. You can take two winners in a row. The third one can be a loss. It can be a winner too. You don't know. It's random. You understand? There's no
Yes.
strategy which tell you that you will take two winners in a row or three winners in a row. It's random. Nobody knows, and you will never know. there's a random distribution between losses and winners. So you have to come into terms with that you can take you can take 3 winning trades. The fourth one can still be a winner, bro. You don't know, or it can be a loser. This goes back to our first point. Anything can happen. Understand? It's like flipping a
Yes.
coin. If you flip a coin, it's either you get a head or a tail. But then if you flip the coin, like if you are recording data and then you flip the coin maybe 10,000 times or 1,000 times, you'll end up getting like a 50 to 40% between head and tail. But then you don't know each flip whether you'll get a head or you'll get a or whether you get a tail. That's how it is. And then the fourth one, an age is nothing more than an indication of a higher probability of one thing happening over another. So when you do technical analysis, what you are really doing, bro, is you finding a higher probability of one thing happening over another. So you'll analyze and then you'll see that, okay, there is a probability that the market goes down by, but 90% 90% probability is that the market will go up, like you anticipate that. So if you see that 10% is like the market will go down, 90% is like the market will go up, what will you do in this case? Will you buy or will you sell?
If it says 50% up and 50% down,
If it says, if you analyze, because an age is nothing more than an indication of a higher probability of one thing happening over another. So if you analyze, you do your technical analysis, and then you see that there's a higher probability that the market will go up. It's like 90% that the market will go up. But then, since it's probability, that means there's 10% left, meaning 10% that the market will go down. What will you do in this case? Will you buy or will you sell?
you buy.
You'll buy because now you have a higher probability that the market will go up. That's what technical analysis does, bro. That's what your age does. It shows you that there's a higher probability of one thing. It's either the market will go up or the market will go down. So if you analyze and then you find out that there's a higher probability based on maybe your support and resistance, your trend lines, your Fibonacci retracement, and then you analyze, you see that there's a higher probability that the market will go up rather than going down. You'll end up buying. That's what your age is all about. And then the fifth one, every moment in the market is unique. Yeah, this one is important. It goes back to the first one. Every moment is unique. So this will also help you understand that if you understand this one, you don't have to trade fear. Like if you take 2 losses in a row, if you take like the first trade, you lose, take another one, you lose. If you remember this point that every moment is unique, and then you analyze, you're about to take your third trade. Your first and your second trade doesn't determine your third trade because every moment is unique. Understand? So if you understand this one, you will stop trading like fear, like trading like afraid because you took 2 losses already and now you're thinking that the third one will be a loss. If you remember that every moment is unique, what happened yesterday or what happened 2 hours ago, it's gone in the market. Every moment is unique. So right, before we go to principles of a consistent trade, and if you have any question or you want me to repeat anything from like the 5 trading truths, like these are the 5 trading truths for which you have to accept, whether you like it or not. You have to accept it. Every time you trade, remind yourself that anything can happen. If you know that anything can happen, how come you trade without a stop loss? You have to put a stop loss because anything can happen. There can be news. The market can just crash. You saw what was happening recently this week. Like the crypto
Yeah.
was and everything. So if you know that anything in the market can happen, no way you'll trade without a stop loss. How can you trade without a stop loss, knowing that anything can happen? And then number two, you don't need to know what is going to happen next to make money. As long as you have your technical analysis, you analyze, you have an edge, that's enough. Don't have to do too much news details, trying to find out what will this speaker say. Nah, you're just wasting time. Third one, there's a random distribution between winners and losses for, for any given set of variables that define an edge. So you must know that, okay, let's say this month you are planning to take 10 trades. Within those 10 trades, know that there will be losses and there will be winners. But which one will be a loss, you don't know. And which one will be a winner, you don't know. That's why when your edge plays out, when your edge is there, you see you're sitting in your, like you're analyzing on trading view, and you see that your setup is there. You have to take it because you don't know whether it will be a winner and it will be a loser. So if you hesitate, that trade might end up being a winner, but then you never took it. And now you have lost, like you should have won that trade. But then you hesitated because you're afraid of losing money. And then now the next one you take, now you're in a loss. And then you take another one. So if you're planning to take 10 trades, take all 10 trades, but then know that within those 10 trades, some will be winners, some will be losers. Which one will be a winner? Which one will be a loser? You don't know. You just have to take all 10 trades as they play out in your screen. An edge is nothing more than an indication of a higher probability of one thing happening over another. This again, trading is a game of probabilities. So you have to analyze using your technical analysis if you're a price action trader, and then you also have to have confluences. So these confluences, they just help you have a higher probability of one thing happening over another. So your level, if you see that there's a level, this gives you a higher probability. If you see there's a trend line, if you see that there's a Fibonacci retracement, if you see that there is this, this is just adding to your edge, giving you a higher probability that, okay, the market's about to go up. But then there's still a chance that it goes down, but the chances of it going down is like 10%. The chances of it going up is like 90%. It's obvious. That case, you'll have to buy because now you have a higher probability that the market is going up. The fifth one, every moment is unique in the market. This is just like every trader is unique. That's why, like in STC, we prefer to do like one-on-ones with you because I have to understand how you trade is different to how I trade. It's different to how the next person will trade from you based on your risk tolerance, your capital, how you understand things, how you analyze. You see, your beliefs too, bro. Your beliefs will play a huge role in trading. If you are someone who grew up like in a bad area where you believe that making money is very hard, né? Trading is so like
Yeah.
it's an opposite thing. When you come into trading, né, okay, I understand like trading is hard, né, but then once you have the skill, everything becomes easy. So if you have that mindset in your mind that the only way to make money is for you to do hard labor, when you go into trading, it won't make sense to you, bro. Like, how can you expect yourself to make like 10K in like 2 hours?
Downloading man.
Imagine it's like you're downloading money. So your beliefs are just going against. So you see, you'll have to also channel your beliefs. Like you also have to check your beliefs, whether you believe that you are a consistent trader, because some people self-sabotage themselves. Yeah? They believe that they don't
Yeah.
deserve this lifestyle. They believe that they don't deserve making 10K. It's not impossible, bro. You need a 9 to 5 to make such. You need to work very hard, like hard labor and stuff. So your beliefs too will also play a huge role in trading. This is also psychology, which you'll have to work on. Changing, we have to change your beliefs. If you think that you don't deserve more in life, how can you attract things which you don't even deserve, bro? So you have to change how you think. And then every moment is unique. Okay, this is what I was explaining. So if you have any question like on these 5 trading truths, you can just ask, or if you want me to repeat anyone.
No, I don't have it. Oh, the only question that I have is that you said that you do you don't trade news. But can I ask you something?
Yeah, yeah.
Yeah, let's say maybe that today there's NFT and
Mm.
already you have your analysis.
And already
Do
have an,
you
okay?
you have your yeah, you already have your technical analysis. What do you
Mm.
do? Do you go with
Okay.
your technical analysis or you wait until the news are over and then? you want
All
to
right.
execute after.
Okay, so the reason I don't trade news is not because news are bad. News are like good if you know what you're doing because they bring volatility in the market. You need volatility to move the
Yeah,
market, and when the market moves, you make money. The reason I don't trade
yeah.
news is because I've been trading with FTMO for a long period of time and they restrict trading news event immediately. Understand? Like when there is NFP at 2:30, you can't enter a trade at 2:30. It's either you wait 15 minutes or you enter 15 minutes before. So let's say I'm in a trade 15 minutes before news. Yeah? Because I understand that anything can happen. My technical analysis are still right and everything. And at the back of my mind, I know that news bring volatility and you know there are slippages. So 15 minutes before news, if I'm already in a trade, I'll start to adjust my stop losses, maybe put it in a break even or reduce the risk. Understand?
Oh,
Yeah, it's not
okay.
like I'll close it, but then I'll put like risk management in play because I'll try to protect myself as much as possible. There was this other time, like I was in a trade and then there were news like NFP, and then I didn't do that. My my initial risk was 1%. Because of slippage and how volatile news are, I ended up losing 1.5%. Imagine. 1.5%.
Okay.
There was an addition of a loss there because news is too volatile. It won't just take you on 1% and record 1% loss. Nah, it will go to 1.5 or 2% worse. So you don't want to find yourself at that
Yeah,
situation, bro.
I think I've seen that before. Also.
Yeah, news. That's what happens. But then when you win, when the news happen to be in your favor, you make like a lot of money. That's the thing. And then
Yeah.
if then another case, ne, if there are news and then I don't see any setup, I'll just wait. And then if the setup happens after 15 minutes, after 15 minutes of news release, then I'll still trade. But then one thing which I try to avoid ne, with my like funded account, I can do it on personal, but funded, you don't want to lose your funded account because bro, you traded news. I can't trade news
Yes.
like immediately 2:30. Nah, nah. I rather wait 15 minutes after or 15 minutes before.
Yeah.
Yeah. So principles of a consistent trader. Let's say, because this is the game, bro. This is the end game. At the end of the day, you want to be a consistent trader. You don't just want to make money today and lose it tomorrow. Make money today and lose it in 3 days. Anyone can make money in the market. Even if you take someone from the street who doesn't know how to trade, you ask them, is it a buy or sell? And then they just choose buy during news, and then the news happen to buy. They'll make money, isn't it? But then that doesn't mean they're a
Yeah.
consistent trader. Anyone can make money in the forex market, but then not everyone is a consistent trader. This is very important. So you want to find yourself as a consistent trader, someone who makes money on a consistent basis. Doesn't have to be every day, but then you know, like over a long period of time, you are profitable. You are in a plus rather than in negative. So if you want to become this type of a trader, you have to objectively identify, okay, I objectively identify my age, meaning you must have an age. First of all, you must know what you are trading. That's why now we're back testing. We're trying to find out what works for you. Meaning you must know your edge, just like the back of your thumb. You must know this is support and a resistance. You must know this is a level breakout. This is what I trade. If you trade trend lines, you must know these are trend lines. I'm not gonna trade anything else but trend lines. So you must stick to your edge every time. Because if you deviate, then you are giving the market an opportunity to mess up with your like your overall plan. End up taking trades which you were not supposed to take, and you end up making money which you were not even supposed to make, or losing money which you were not even supposed to lose. And then the second one, you must always predefine your risk at every trade, because if you know that anything can happen in the market and that every moment is unique, before you enter a trade, go to that thing I showed you, the calculator, calculate your risk. Are you risking 0.1%? Are you risking 10%? Are you risking 5%? Are you risking 2% of your account? Are you risking 1%? This is the only control you have in the market. You don't know how much the market is going to give you today. but you know that you are willing to lose 1% or 2% or 3% or 5%. So that's why you have to focus on things which you can control. Understand? That's why you must have a daily stop loss target, daily loss target. Okay. Third one, I completely accept the risk or I'm willing to let go of the trade. So if you are like, okay, if you must completely accept risk, this is what I mean. Like when you analyze and then you choose to put your stop loss at a certain level, the fact that you put that stop loss there, that means you are willing to lose that certain amount of money, which determines your stop loss. So if your stop loss is maybe 50 pips and that 50 pips correspond with 500, that 500, bro, must already be gone in your account. You must not think that you have that 500. You must be willing to lose that 500. That's why when the market is coming towards your stop loss, do not increase the stop loss, hoping that the market will reverse at a lower like level. Stick to that 500. If it takes you out, you're out. Do not ever increase your stop loss when the market is coming towards your stop loss. Then,
Okay.
yeah. And then the fourth one, I act in my age without reservation or hesitation. So this will also happen. Like if your mind is there, if you are trading in the zone, if you are in flow with the market, no way you'll hesitate. When your setup is there, you have to take the trade, bro. When your setup is there, don't even think twice. If you see a support and a
Oh,
resistance, you have to enter. If you see a level breakout, you have to enter. Don't even wait. Don't hesitate. Don't think that you're going to lose. Hey, what if I lose? What if I do this? Nah, don't hesitate. Your age is there. You have to act on it.
okay.
And the fifth one, I pay myself as the market makes money available to me. So this is okay. We'll cover this more when we do trail stops. You know what are trail stops, right?
Yeah.
Because Because as a trader, you have to be offensive and defensive at the same time to make money. Because if you know that anything can happen, you can be in a trade and you are winning. Your initial risk to reward was a 1:3, ne? Was a 1:3. You are already winning now. Let's say you are in a 1:2 now. You are now 2% up. You are just left with 1%. If you know that anything can happen, bro, you must be like trade management. You must be managing your trade. You must be trailing stop. You must be like locking in profits. You don't want to give back to the market. But then this also like if you don't know like how to trail stop, you'll now end up like just moving your stop loss into unnecessary levels, not giving the market enough room to breathe. You see, so you have to know like how to trail stop in a proper way, not like you are just afraid that the market will reverse. Because some people they have this fear of leaving money on the table. It's either they close early
Yeah.
or they put their stop loss, they move their stop loss into areas which they are just afraid that the market will reverse. So this concept, you must have like a plan, like knowing when to trail stop and where to trail stop in an objective way, rather than you just being afraid. And then six, I continuously monitor my susceptibility for making errors. Okay, just what I told you, bro. Like as a trader, this thing is a long-term thing. It's a lifetime thing. Also, me, every day I make mistakes. But then what differentiates me and someone is that when I make mistakes, I journal. That's why you need to journal. I think it will be next week or next of next week. I'll be teaching you how to journal. There are like four journals per day, like when you are trading and everything. So we'll be going through these journals and everything. So these journals will help you to always continuously monitor yourself as you make mistakes and then you adjust and then you learn from those mistakes and you move forward because you'll never be perfect. We're not robots. Understand? I too still make mistakes, which I've been making maybe a year ago. But then the difference is that I learn from those mistakes and I try my best to focus on them such that I do not repeat them in the future. You're not a robot, you'll always make mistakes. But then the key thing is you have to learn from those mistakes and you have to journal. And how do you learn from them? You learn from them by journaling and seeing that this mistake, you have been doing it for the whole week or the whole month. That means this thing, you have to get rid of it. And then we start working on that mistake. Just like, let's say you have fear of losing money, fear of being wrong, fear of leaving money on the table, or you have FOMO. So if you see that on your journaling, you have been trading trades under FOMO, oh, you know what we have to do next. We have to work on your FOMO. We have to find strategies which will help you not to fall under FOMO again because it's costing you money. In trading, you pay by losing money, you pay by your psychology, pay by your physiology too. You pay too much when you make mistakes in the market, bro. Not only do you pay by
Yeah,
losing money, you also pay your mindset will now be fucked up for the rest of the maybe month or a week. See. And then
yeah,
is last one. I understand I understand the absolute necessity of this principle of the okay, this is just you understanding that all these principles, if you want to become a consistent trader, you have to agree to these principles and you have to stick by them and not violate any of them. So So yeah, as you're trading in the zone, this is some of the key things which you'll come across. Some of the most important things which you'll come across if you want to be a consistent trader. Some of the things which you have to come into terms with. If you thought that, bro, your technical analysis is always must be always 100%, I'm sorry, that will not happen. Because if anything can happen, you see, because if anything can happen in the market, your technical analysis can never be 100%. Understand? And
yeah,
what you traded yesterday might not be, doesn't mean that it will happen today because every moment is unique, just like every trader. So every moment is unique in the market. So if you took losses, don't let the losses get into your heart or your head, bro. Meaning you must be willing to take the next trade and the next trade and the next trade. What happened to the previous two trade must not affect how you act. You must not hesitate to take the next trade. Because when you hesitate, you don't know that trade which you are hesitating on, was it going to be a winner or a loss? Understand?
yeah.
Yeah, so yeah, that rounds up the session for today. This is what I had prepared. So I don't know if you have any questions.
Nah, not really, because it's pretty much the same thing that I'm reading on at the moment. So it does make sense. But
Yeah,
yeah,
bro.
I read on those, especially the first one, the price trading fruit. I've like that's the one thing I've understood because I think there's a chapter where he repeats it from chapter 8 and 9. I think somewhere there where
Hmm.
he repeats it that you need to know that anything can happen at any time. The
Exactly.
market is not your friend. The market
Exactly.
is not your friend. And also he was making I think he made an example of the dog and the boy. Do you remember that?
Ah, yeah,
Where
the
like
dog.
you need to yeah,
Yeah, most
you need to
yeah,
train your mind. That
exactly.
if
You need to.
if anything had happened previously, that
Hmm.
doesn't mean that it can still happen in a bad way again. So it's also that thing that I had to work on because
Yeah,
like
yeah.
that was speaking to me to say like if maybe you've taken a trade previously and then it did not work out, you're a bit more scared to take another one because of what happened previously. So I
Hmm.
understand that one. Yeah, I understood that one also. So
Yeah.
yeah, I am reading the book. I'm reading the book. I'm busy. So like what I do like at least one chapter a day. And then if I see that I have time, I just I try to do two chapters a day. One in the morning, one in the afternoon session. Because I divide my session.
Yeah, yeah, yeah. Yeah, because bro, like psychology is everything. Like that will be after us doing all these technical things. This is just 20% what we're doing, the technical analysis. Then we'll now have to get deep into psychology. Like this is deep. The psychology part of trading. That's where everything is. Can have one of the best trading
Yeah,
strategies. But then if your psychology is not there, that strategy will not help you. You will see that your age is there. You'll analyze, you see that your age is there. But then just because you took two losses previously, you'll start to hesitate. You'll start to be afraid to enter that trade, which you see it's there. You see?
yeah,
And then the reason you are hesitating is because it's in your psychology, it's in your mind. You're thinking that it will happen again. But then that's not how the market works. Every moment is unique. You must accept that. So these things, bro, like you can read them, you can read them and understand, but to practice them, that will be the hard thing. For you to completely
yeah.
understand and for you to accept this trading truth, it will take time. Now you can read them, be like, yeah, I understand, I know, bro. But then when you are in the market and when you
Yeah,
have to practice these things, you'll see that, yeah, you don't really believe them.
I know. I know.
Hard, bro.
I
That will
practicing it is very hard. I know.
Yeah, the practice part of it, that is the hard part. Reading, you can just read and be like, oh, okay, it makes sense. But then when you are in the market now, will you practice what you read? We'll see. I'll
Yeah.
ask you, I'll ask you one day after taking two losses, and then you'll tell me that "Hey, there was this opportunity which I missed. I didn't take it because I already took like three losses in a row. I was afraid. I'll ask you, do you remember that anything in the market is unique?
Yeah.
So yeah, that's how you have to approach trading. That's how you have to move on from now on. Try to change how you think. Try to change your mindset. Every time you are trading, you can write these notes down and then read them over and over again until they become your own belief.
Okay. Okay. I'll do that.
That way.
I'll do that. Thank you very much for the day. I'll
That
see you
way.
tomorrow, right?
Yeah, yeah. Tomorrow we are doing what? Let me see.
It's risk management tomorrow.
Risk management. Oh, okay. Because I have a session at 4. Okay, yours will do it at 2 at 12, and then okay, I'll
Uh,
see.
Yeah.
Now, all right. Take care, bro.
I will. Thanks, bro.